Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities recovered after 3 weeks on easing geopolitical tensions. Major US equity benchmarks posted weekly gains driven by a strong recovery in growth sector stocks or the Magnificent Seven and strong earnings reporting during the week, even as key US inflation gauge and the GDP growth data surprised negatively. Asian equities posted strong gains driven by Hong Kong, which rose about 10%, followed by Chinese equities that rallied about 8% after positive earnings reporting and a series of policy support measures to boost investor confidence. Back home, Indian equities also recovered. The Nifty index recouped previous week's losses, gaining on each of the first 4 trading sessions on improving global sentiments, but erased a part of the gains on Friday amid mixed US economic data and weak domestic earnings reporting during the week. Broader markets continued to outperform large cap peers, with the Nifty mid-cap index up 4%, while the Nifty small-cap index was up 4.4%. Coming to sectors, all sectors ended this week in green, with the realty, telecom and metals leading the gains with a rise of over 3.8% recorded during the week. The Indian fixed income market had a relatively decent week, with Indian government bond yields falling across the curve on improving domestic banking system liquidity, easing geopolitical tensions and a strong demand at the RBI's weekly debt auction, even as US bond yields continued to rise higher amid higher than expected US personal consumption expenditure growth. The yield on the 10-year Indian government bond yield fell 4 basis points to close at 7.19%, while the 3-year and 5-year Indian government bond yield fell 3 basis points and 7 basis points respectively. The INR appreciated 0.1% against the USD to close at 83.35 per dollar, tracking gains in domestic equities and bonds, while higher crude oil prices and rising US bond yields limited the INR gains. INR gold fell 1.3% during the week. Brent crude oil snapped a 2-week losing streak, up nearly 3% for the week after the rebound on Friday, supported by a top US official expressing optimism over economic growth, while supply concerns lingered on due to conflicts in the Middle East. Coming to macro updates, there was not much on the domestic side. However, the two much talked about data that got reported from the US. The first was on US gross domestic product, which grew at 1.6% annualized in the first quarter of 2024. This was below market expectations of a 2.4% and a 3.4% growth recorded in the previous quarter. The US economy grew last quarter at the slowest pace in over 2 years as consumer and government spending cooled amid a sharp pickup in inflation. Personal spending grew below expectations at 2.5%, while the government spending and trade inflation-adjusted final sales to private consumers rose at a 3.1%. The second data was on a key gauge of US inflation measured by the change in personal consumption expenditure. That rose to 2.7% on a yearly basis in March from 2.5% in February. This reading came in above the market expectations of a 2.6%. The core personal consumption expenditure price index, which excludes volatile food and energy prices, held steady at 2.8% on a yearly basis. However, this was above market expectations of 2.6%. On a monthly basis, the personal consumption expenditure price index and the core personal consumption expenditure price index both rose 0.3%. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.